Everything is connected. Bank stocks give market a boost. In theory, this should be or have been a miserable day for stocks. Banks should be widely volatile because of all the leaks about stress tests. But it's not been happening. Turns out the stress test results are coming in fairly well. Or it could have been worse, as they say. The rally was expanding thanks to a better than expected report on private sector payrolls, higher energy stocks, which means higher oil prices, higher gasoline prices, and even some strength in tech stocks. Bank of America, whose shares tanked in pre-market trading, looks to be in somewhat better shape than thought, although they may still need some more government money, more bailouts. The ADP National Employment Report showed that private sector employment fell by approximately 491,000 jobs in April, which was not as bad as economists had expected. Yes, it could have been worse. The March number was revised to a decline of 708,000, also lower than the originally reported loss of 742,000 jobs. Economists had been expecting a dismal loss of 580,000 private sector jobs last month. ADP compiles data taken from the 500,000 payrolls that the company processes from businesses throughout the U.S. Weekly jobless claims have leveled off at a 4-week moving average of 637,250 and have remained between 600,000 and 650,000 for the past 6 weeks. Nonetheless, how can you have an economic recovery if hundreds of thousands of jobs are still being lost? They're not being created. No, they're being lost week after week, month after month. That doesn't make much sense, does it? No jobs, no recovery. On Friday, the Labor Department will release its April jobs report, and economists are looking for the jobless rate to rise to 8.9% in April, up from 8.5% in March. They predict a loss of at least 600,000 jobs last month, which would bring the total number of jobs lost since the recession officially began in December 2007 to 5.7 million, the most of any economic downturn since World War II. That's the real news. And 1 in 5 homeowners underwater. More than 20% of Americans owe more on their mortgage debt than the value of their homes, according to a new report. In fact, nearly 22% of all U.S. homes, which totals approximately 20 million residences, were in negative equity or underwater, slammed by a 14% drop in home prices as of March 31st. Well, I guess it could have been worse. Or it could be worse, right? Las Vegas, Nevada, where a whopping 67.2% of homeowners would have to bring cash to the table if they sold their homes, was the worst. Other bad markets are Stockton, California, where approximately 51.1% of homes are underwater, and Modesto, California, where 50.8% of the homes are in that position. So, homeowners in negative equity have fewer options if they take financial shocks, such as a job loss, a divorce, or medical bills, making foreclosure more likely. This is about negative equity. The hundreds of banks that have received Troubled Asset Relief Program funds, or TARP, will now have some guidance to get themselves out of the government's hands. Federal regulators will outline a plan in which banks must first show they do not need to rely on a Federal Deposit Insurance Corporation Program, or FDIC, before they can repay TARP funds, the Wall Street Journal has reported. The FDIC program, the guarantee of debt issuance, allows companies to borrow money cheaply. The move comes as a handful of smaller banks have refunded their TARP funds, and several big ones say they might do so. Approximately $1 billion has been returned out of $332.5 billion. That's not really very much, is it? On the other hand, Citigroup issued $7 billion in debt backed by the FDIC last week. The stress test is expected to show that Citigroup and Wells Fargo will need to raise additional capital. Meanwhile, Walt Disney shares jumped 12.2% because, yes, people need a way out. They need to forget about the bad times. Just like the movies. Yes, it's bad out there, but people are still going on vacation, said one economist. Chrysler wins right to sell assets. Chrysler's creditors, who hold $6.9 billion of its debt, had tried to block the move. But yes, creditors will of course have the right to appeal the ruling. Meanwhile, a move by General Motors to issue 60 billion new common stock shares would effectively wipe out the value of most shareholders' holdings. That doesn't sound very good. Some kind of way. So, all these signs are connected to each other, to everything else that's going on around the world, happening every day. Afghanistan, Pakistan, Iraq, all the wars, the pirates, the worldwide recession, the extreme weather events, and every other thing that's going on. And all these are more signs of the end times, transition days. Everything that can change or must change rapidly. All these are more signs. daily.